Clown. Come on, come on. Day 2 of the 30-day boot camp. Ladies and gentlemen, welcome. Yeah, this angle is so much better. Today is the day that we're gonna fight. Well, I think it's tomorrow or later tonight, whatever. We're gonna know if the markets are gonna give us great opportunities for the rest of the year, or we're fucked. Honestly, I think whoever comes out, there will be volatility. I think there is going to be some type of movement up and down no matter what. Oh, and we lost a trade yesterday. Round of applause, everybody. Round of applause. We lost our first trade yesterday together. And you know what? I think the same thing happened in the last boot camp. And then, like the last week of the boot camp, we won 3 trades or something, and it outdid the first trade that we lost. And I'm glad that we lost the first trade rather than win, because it creates a false expectation of what the market is going to be like every single time. So if the first trade that we take, we lose, the next trade that we take is a win, you're almost like, all right, this is cool. But if you win the first trade, you're almost like, shit, I want to do it again tomorrow. Now, if you lose the first trade, you're like, wait, let me make sure that I learn from whatever the fuck I just did so it doesn't happen again. And then when I go take the next one, I am doing the correct thing. If that makes sense, type 1. If it doesn't, type 2. Sick. So trust me, I did not want to lose $100,000 yesterday. Just, you know, it's the risk that I wanted to take. I actually lost a lot more than 100,000. I trade multiple different accounts. I trade, like, I have a public account which I shared with my students inside of the Discord. Some people have access to it. I'll probably give you guys access later. I don't want you guys to get distracted. I have a personal account, and then I have like an investor account where I have like my money, like 2 of my friends' money in there, and we just go crazy. So if you guys are ready for day number 2, put a 1 in the chat. If not, put a 2. Sick. All right, cool. All right. So today, day 2. Well, if you guys rewatch the last recording, type a W if you didn't put an L. Okay. Now, for those of you guys that are typing an L, why did you not watch the recording? Was it a time thing? Was it that you understood it so well? Was it that you didn't need to rewatch it because you already got it? I rewatched it 2 times. I saw it once. I saw it once again. It took a long time to be uploaded. I mean, yeah, because it takes a long time to render. Like, I literally have the best Wi-Fi that I can possibly get my hands on. I saw it twice. Yeah, you guys could rewatch it. Yep, perfect, perfect. Rewatched it, perfect. Perfect. I didn't have to because it was very beginner. Fair enough. You're probably an advanced trader. If you're a beginner and intermediate, I highly recommend that you should rewatch it. Okay, sick. Yeah, the recordings, I'm gonna try my best. Where could you rewatch the recording? So there's inside of your email, when you got your spot locked into the 30-day bootcamp, you are getting access to Academy. On Academy, you get a login, and then you get a username and password created, where then you can go and watch your recordings. It was automatically created for you once you locked in your spot. If you never got that, you lying, and you haven't checked your spam, you haven't checked your promotions, go and look for it. Look for it, look for it, look for it. And if you have any questions, reach out to support. Please don't blow up support today. If you notice, I tested the whole 2-minute patient thing once again, and not that many people reached out to support. I was literally just on a call with them, and I wanted to make sure if you guys practice your patience, and you did, which is fantastic. So yeah, check your junk folder, check your spam, check everything, because you should have access to it. If not, talk to the support. And if it took 8 hours to upload, I'm going to try my best today to have it uploaded in less time, but it's out of my hands. It takes a really long time to render because I have to download it from my computer and then I have to upload it on the platform. So cool. Now oh shit, the lights just fucking changed. True. All right, so let's let today begin. So I don't want to break down the trade. I really don't, because we're gonna get super, 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 super sidetracked. And that's not the angle that I want to take today, right? So let me just do this. Yeah, I think they're fucking with the lights downstairs. So please disregard whatever's going on with the lights. All right, so let me just do this. All right, cool. So let me turn off the chat. So go real quick to trading view. So just to kind of give the beginner traders that possibly took this trade and possibly took the loss somewhat of clarity, and just to basically give them clarity on any concerns that they might have with this. There is nothing that I would change from this trade. I would take this trade 10 out of 10 times every single motherfucking time that it happens. There is nothing that I would have avoided here. There is nothing that I would never do again. I guarantee you, and I'll drop this on a recording. I guarantee you, you take this pattern 10 times, the same exact pattern, which is the only pattern we really use. And we're going to get into this pattern once we get into week number 3 and week number 4. I guarantee you, if you take this trade 10 times, you will have a minimum, and I'm talking about bare minimum, 40% win rate, meaning you will lose 6 times, which is a fucking lot. So you're going to lose 6 times just how we did right now, which would be minus 6%. And these 4 trades that you do win, you're going to get a minimum of a 1 to 2.5 risk to reward. So if you notice, I have my risk to reward at 1 to 2. We'll put it out at 1 to 2.5. So then that would be 2, 4, 2, 5, 7.5, and 10. So you make 10% with these 4 and you lose 6 with the 6 losses. You're now net positive 4%, only having a 40% win rate. So when people ask me, how do you handle losses? How do you this? It's because the statistics are there. The only difficult part is that you simply have to have one of the 3 things that I asked for you guys when we started the boot camp. One of them was time, one other was dedication. And can anybody tell me what the third one was? Open up the chat. What was the third one? Time, dedication, and patience. See, I flipped it around. So you have to be able to have patience to wait for these setups to appear. These setups are not going to appear every single day. They're not going to pop up every single hour, and they're not going to pop up every single second. They take days, they take weeks to happen. Last week, I took 0 trades. This week, I took 1 loss, and I missed this possible win that I could have taken on this trade right here. And I missed on this trade right here. It is what it is. There's nothing that I can do, and there's nothing that I would change. So what is the risk to reward ratio and all that? We're going to get into that. That's why I kind of really didn't want to get too deep into it, because I know a lot of beginner traders, they're probably going to get confused or lost. So I'm going to kind of get back onto the track. But just to bring some clarity to this trade, there is nothing that I would change. This is a perfect loss that we took together. And I'm very glad we took a loss together on day 1 of the bootcamp, because I am very confident that the next trades that we take over the course of the next 60 days will outweigh this loss and much more. So sick. Now that we got past that, we're going to get on to the next one. And then also what didn't help is trading on election week. I traded on the 1 week that happens every 4 years, which is not that smart, but it is what it is. All right, sick. So now that we understand that, we're going to get into the next point, which today what I want to talk about are going to be multiple different points. And the first one is going to be, remember, week 1 is what is everything. Next week is how everything works. The 3rd week is how I use it. And the 4th week is how I master it. So the first point that I want to talk to about is, how does a broker work? Right? How does a like the public account? You guys won't be able to log into this account, but I'll show you guys. This is like my public account that I just did for the students inside of Discord. All right, so before we kind of get into here, I want to explain to you how, wait, let me log out and then I'll log in with you guys. All right, cool. So, like I was mentioning, this is the broker that I use. Now, how a broker works is very simple. The broker is in the spread business. The broker makes money by being the middleman. So this is us right now. Let me bring this right here. This is me. This is you. This is virtually every single retail trader in the world. So this is me. And then this is the market. Me want to enter the market. Now, I can't just go and bet that the euro is going to get stronger than the dollar straight to the marketplace. Who the fuck am I to put $10,000 at risk at the marketplace when I don't really have credibility? I don't have a license. I don't have any form of legitimacy that this bet is real. So I cannot go to the market and bet directly. It simply cannot happen, and it won't happen. It could only happen through a middleman, which is what this is. LQH markets, the OANDs of the world, the IC markets, all these different markets are in the world. The broker is where you have to go and execute the trade. So then the broker takes that trade to the market for you. The market does not want to deal with petty money and the bullshit of us retail traders. They don't want to deal with having to talk to support, having to create accounts, having to everything that it requires in order for you to go bet in the market, which is a lot of minuscule task. The market does not want to do that. The big banks of the world don't want to do that. They just want to get the big transactions and only deal with businesses. They don't want to deal with retail people. So us retail people, we have to go through a broker, which is going to do that work for us. And the broker, in turn, for making it easy for us to execute these trades, they got to charge a fee. So there's many different ways on how they charge fees. They charge fees every single time you take a trade, how long you hold the trade, when you deposit and withdraw money. The broker is in the fee business. They make a fee off of everything. They're kind of like it's a little analogy here. You ever know, it's kind of like an insider, but like I know some friends of mine that they only do things for a fee. I'm like, yo, bro, can you please help me throw all this trash from the house? Like, yeah, but there's a fee. It's like, $100, $200. There's always a fee involved, a little hidden fee in something. That's basically the broker business. There is a hidden fee for everything you go do in it. Every single time you go take a trade, you want to close a trade, there's a fee in everything. Now, there's different types of ways on how to avoid those fees or minimize those fees. For example, these guys, for example, they have here anything over $1,000, they lower the amount of a fee. So instead of the fee being 1.5 pips, then it goes into 1 pips. If you have over $10,000, then there's no fees on the spread. If you have over 1 to 500 leverage, there's no deposit, withdrawal fees. There's just like all this bunch of bullshit. That it's just like different marketing ways for them to make you feel more comfortable, right? So like deposit how you want, no added fee. Okay, look, there you go. So they have no fees when it comes to deposits or withdrawals, none of that shit. So I guess they won't charge you on the deposit or withdrawal fees, but they will charge you, like they're gonna make that back up somewhere. They're not gonna charge you on the deposit or withdrawal, but they're gonna charge you in the spread and commission. It is what it is at the end of the day. They're spread business and they won't give it to you on one side here because they mark it up one way. Like, yeah, we're a broker that does not charge for deposit or withdrawals, but we're going to charge you a motherfucking spread and you're going to get a little bit of slippage whenever you close a trade. Or, you know what? You have no slippage with us at all. Never. But we're going to rape you on the spread or the commission or something. Like, it's just how it works. At the end of the day, it all balances out. They're going to give you here, but they're going to take away from here. and vice versa. At the end of the day, it's the same thing all around. And something that I've realized at the end of the day, anywhere you go, you have to pay the fee. It's the cost of doing business. It's the cost of this system here being easily accessible to you. There's no way around it. It's like paying taxes. Yes, you can have a deduction of taxes, but you got to pay it at the end of the day. It's part of the game. You're in the game of making money. There's a cost to make that fucking money. That's just as simple as it is. For me, I don't mind paying a fee as long as my money is safe. I'll pay a higher fee just to make sure that my money is safe. I don't give a shit. And that's what I did here. It cost me a little bit more money at the times of, closing some trades, or depending on if I have a no commission account or whatever. It is a little bit on, I say, the standard side, more or less. It's not the most competitive, but I'm good. And I like that. I like the fact that I don't mind paying the fee, but my shit is good. Like, think about it. If you make, let's say, whatever, let's say you turn, I don't know, let's say you deposit $1,000 and then you took that 1,000 to 3,000 and you go withdraw the whole 3,000 and you only get $2,910. Do you really give a shit? No, you don't care about fucking $20 when you just got your money 100% good. Dude, take $40. I don't give. I personally don't count those small dollars in my opinion. I care about the big bulk. I care about the big money. I don't like stressing about the little money. I don't even notice it. I don't care about it. To me, it's not a big deal because it does not compare. Like for me, if even when I go buy something big, I'm like, is this more than 10% of what I'm worth right now? If it's not, then it's not a big deal. It's not going to make or break who I am and what got me to this point, and it's not going to stress me out. So anything really like that's not that big, it's just a personal thing, doesn't mean anything to me. So the broker, the way it works is by fees, by making money, connecting you to the markets. Now, let me actually log into this account and let me show you guys. Let me make sure I don't show anything. Well, before I go in, do you guys have, if all this makes sense, type 1. If it doesn't, type 2. Okay. Look. This LQH isn't available for the US clients. Nope, it's not available for the US clients. So there's a little hack behind this, and this is all I'm gonna do, right? So I mean, I don't want to stop the recording and shit, but hold on, let me just do this. Give me 1 second. 1 second. So if you do not have a different type of, I don't know, like form of verifying your identity, you can also use this right here. This is an e-residence. So let me actually share my screen. So you guys, I'm sure we've all seen this guy. This guy's a fucking meme. Like this guy's literally a meme. So if you guys want to get an e-residence, if you're in the US, you can just go here. I have one of these, costs $200, and you're basically a resident of somewhere else, but you would always want a different residency. You don't have to have a physical address anywhere. And with this, it's going to work. It's going to be perfectly fine. It's just for the KYC at the end of the day. And you just deposit and withdraw in crypto. So I have one of these, but I also have multiple different passports. So it's rns.id, literally costs $200, and you have a virtual ID of basically wherever you want. It's like the craziest hack and bypass fucking anywhere. So you have an e-residence somewhere without being anywhere. So it's a little hack for you guys. Yeah, I don't like posting about this or talking about it, but yeah, there's like so many hacks out there. How do you avoid slippage? Great question. So the way I look at slippage is, yeah, this is perfectly legal, dude. I'm not doing anything illegal. I'm just getting in residence online. That's literally it, just an e-residence. So, and yes, and with the VPN, of course. So now, before I get into what is slippage and how does this work, I already see the question getting spammed into the comment section. So I'm going to explain what is slippage when we get into that point and how to avoid it. I'm going to explain what is spread, what is commission, what is all this stuff. I just want to like go one step at a time. So before I continue to move on forward and then go into my account and kind of just show you guys like other features, is there any other questions you guys have regarding what a broker is and how it operates? I get to the verified page for an ID and I stop there. Thanks for helping with this. You're welcome. Does LQH only accept deposits in cryptos? Yes. I mean, dude, so don't ask me support questions about LQH. Please ask them. I'm not the fucking support, respectfully. If you were to use, yeah. One second, guys. I'm just reading through some of these questions. What are lot sizes? We're not there right now. Why do you need an e-residence or a VPN? You need an e-residence because these people do not accept US clients. If you are not in the US, this does not, if you're not in the US, Cuba, Iran, this place, this place, this does not apply to you. If you are in the US, then this does apply to you. And then you just use a VPN, so it lets you log into the website. If you don't use a VPN, the website will block you. Why don't you recommend a US broker? I do, but the only other US broker I recommend is Oanda. So I personally have used Oanda for a very long time, using Oanda for like 6 years. But the big con with Oanda is that you only get a 1 to 50 leverage. Now, what is a leverage? What is all this? I'm going to get into all that later. Basically, you get more for your money here than you do here. The only difference is that here you basically get less security because it's not a US regulated company. Here you get more security because it's a US regulated company. It really doesn't change anything. Regulated companies like the one that was here in Miami, what was the name that this guy went under? The Miami Heat shit. What was it called? What was it called? FTX. There you go. Perfect. FTX. So FTX was US regulated just like Oando. I went under, so it doesn't really mean anything. So again, don't ask me support questions. If this lets you trade this futures, I have no idea. Please reach out to them. If I get blocked, you don't get blocked, your IP gets blocked, just get a VPN and then you'll be fine. Can I use a US? Okay, so I think these are just some like troll questions. Like there's no way. All right, cool. So perfect. So I don't see any relevant questions on what is a broker. A lot of these questions are, what do I think about this broker? What have I tried this one? Have I this? Have I this? So that's not the question that I'm asking you guys. If I were to recommend the broker, this would be the one. If there's a million other brokers and you want to know my opinion about it, I don't have one. I don't really have anything to say. This is the only one I have anything to say because if I answer, like, it's completely irrelevant what I think about other ones. This is the one that I actively use right now, or Oanda. Oanda or LQH markets are the only two that I recommend. There is plenty of more that are as good or even better. I don't know them, but I'm sure there is. And I don't know anything about them. I don't care anything about them. These are the ones that I use. These are the ones that I recommend. And these are the ones where I have deposited my money into. I'm going to actually show you how I have deposited my money into this. And I'm going to log in and kind of give you guys the walkthrough, just making sure I hide my email. Last thing I need to do is get one of my emails spammed. And luckily, it's like not even an email that I use, but okay. So this is basically what I deposited into the account. So deposit into crypto, withdraw into crypto. This is the account that I created, which is a commission free. I have a 1 to 500 leverage. What is leverage? What is all this? That is something that we're literally going to talk later today or probably tomorrow. Let me see. Yeah, we could. Yeah, we could talk about it today. Just out of here. So that's what is. That's what is leverage. Okay, sick. So I have a 1 to 500 leverage. The US broker like this one won't let you have such a high leverage because they are US regulated and the US regulations minimizes the amount of leverage they give to the clients. Since this does not have a US regulation, they are more free to be able to have clients do whatever they want with their money and be able to use higher leverage. Now, high leverage is a double-edged sword, but again, once on what is leverage, we'll get to that point. The topic we're talking about right now is what is a broker and basically what it consists of. So when you pretty much go into here. Again, I'm going to show you guys how to work all this on next week on how everything is. Right now, we're just on the what is a broker. So this broker clearly it offers all these different markets. These are the different price points and so on and so forth. So this is kind of the inside part of it. So you guys can see here, I deposited 50,000 the day before Halloween, deposited $100 to test, then I put 50,000. Right now we're at 39,000 because I lost this trade on this account as well, and I risked 20% on it because to me it's like a fuck around account that I'm just showing publicly. You guys can see right here, haven't withdrawn or anything, just because this is the first account that I created in here, and then we internal transferred the 50,000. You can go here to your MT5 accounts, and you can open a live demo. You could basically do whatever you want. Go to support or be an IB if you want to. So this is what the interface consists of. And if you have any questions about this broker, what do they offer, blah, 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 they have a little live chat right here. You can go and ask them. I'm not the guy. I don't know. And you're going to get your response that you would want to get that I probably won't reply here in the chat when I open it up. They will be able to, because I'm going to ignore any questions that I don't have the answer to, and they're more broker related questions. So if you guys understand everything on what the broker is and what this interface kind of looks like, type a 1. If you don't, type a 2. Remember, we're still on the what. We're not in the how. We're going to come back to this next week and get a little bit more in depth. And I'll probably deposit live with you guys some more money and trade with you guys together. But right now we're on the what's. Again, baby steps. We were here just 24 hours ago. We have so much more time to go. So if you guys understand everything on the what, type 1. If not, type 2. Perfect. All ones in the chat. Again, patience. Will you be able to withdraw your funds easily with a VPN? Yeah, nothing's wrong with it. What is an IB? An IB is when you're an affiliate. You're discussing brokers for beginners because what if we plan to use funded? Great question, Damon. That was my next point. Once we finish brokers, we're going to get into funding. All right. LQH is one of the brokers I use in the challenge. Yes. Crypto deposits only? I believe so. I only like depositing. I like keeping all my trading money in crypto. What about verifying your phone number? I don't know, dude. Please ask them. How do you deposit? Please ask them. Where do the funds go when we use a VPN? So the VPN is just to change the location of your computer. So it's just the IP address of your computer. It's not going to do anything else with your money. You recommend any VPN? Yeah, sure. I'll recommend NordVPN. And this is the only one I recommend. This is the one that I actively use. As you guys can tell right here, I am actively in Canada. So right now I'm with Drake somewhere in Canada. And I can change it really fast to somewhere else. But last time I did that, my internet got glitchy. So right now I am in Canada. I tried, but I need a passport. Okay, control. All right, guys. Fuck, hold on, dude. Let me get to the bottom of these questions. What about withdraw to the US? So deposit and withdraw, I do, like I just said, everything is done through crypto. So I don't have my trading profits come to the US in my US bank account. They go into my crypto account. And then for my crypto account, which can be a Coinbase, can be a Binance, can be a KuCoin, can be whatever, then I bring it into my bank account. So it doesn't go from the broker to my bank account. So the way it works is, let me just turn off this chat. So guys, again, I want to get to every single question, but I need you guys to be like realistic with the answers. Like, you know, like I know a lot of you guys just want to like talk shit because you guys get it, but like it makes it difficult for me to like be able to catch up with every single question. So just like if the questions that, you know, I probably won't answer, please keep on. I want to get to everybody. So we could advance quicker, you know, like we should have been done with this topic already, but it's okay. So again, so this is LQH, and then this is the bank account. You can't just go from the broker to the bank account. You have to go through a middleman. Everything has a middleman. There's a fuck ton of them, and there's a bunch of fees involved, and it's part of the game. And then this is where an exchange comes through. Exchange, where you exchange your crypto, and in here you turn it into fiat, and then you turn the fiat into your hardcore cash in your bank account. It's supposed to be a money sign. But basically, it goes from the broker in crypto into an exchange. And then in the exchange, I turn it into fiat. And then from fiat, I take it to the bank account. And then from the bank account, I turn it into a motherfucking Bugatti. You know, that's how it works. That's really how it works. I can't even lie. All right, before I open up the chat, let me read some of these questions. What do you mean by only using crypto? What do you mean? Why do you only like to trade in crypto? I like my trades to be in crypto because if I want to move it or do anything with it quick, I can, for example, Oanda, you want to withdraw money from Oanda, good fucking luck. Took me like 3 weeks to get my money from Oanda just because they're US regulated and they don't move crypto. They do, but they move just fiat. And it takes a lot longer. They're a bank, so they have to get approval by an underwriter. Because the money you give them, they don't put everything into the market. They'll put some of it into whatever account and then another whatever account. Like they just won't put everything into your account. They're a bank. That's just the way they work. Or they do put it in, but then when they withdraw it, they have to liquidate some of your positions because they loan that money out to something else. Long story, I don't know, right? This is just me using from basic research I find. Basically, when I use a US regulated broker, it takes a very long time for you to get your money back. When you use an offshore account and it's just crypto, you deposit now, you withdraw now. There's no delay. Everything is pretty much instantly. So that's like the main difference in between the US regulated and non-regulated. And on top of that, when you deposit, it's like I can literally deposit $100 right now into the broker and I will get it right now. If I wire into Oanda, like I can literally deposit $100 right now, and I would do it, but I don't have my ledger with me. And I'll explain what a ledger is later. But I can literally deposit $100 right now and it'll get there. I'm talking about in like 30 seconds. Look, for example, look, right? Let me just show you. We'll come again. I hate this because you guys ask me questions that get advanced, and so I'm so passionate about this. I'll go all the way in on that question, and I'm not supposed to because I'm stepping on myself for next week. So I'm wasting time on today's topics for next week's topic, and I kind of like I don't want to ignore your questions and I want to answer them, but like I need you guys to just again be patient with your questions. If you guys get it, cool. If there's a question that you can possibly understand that I can ask it next week, it would make it so much better for all of us. But whatever. Let's say right now I want to add funds. So I want to come here. I want to add funds. Let me pause this. I'm just going to pause my screen really quick. Okay. So if I want to add funds, I just come here. So again, I go into wallet, add funds. Let's say I want to deposit $100. I go deposit into this account. What type of crypto do I want to deposit in? Do I want to deposit in Bitcoin? Do I want to deposit in Litecoin, Ethereum, Tether, USD? Let's just say we want to deposit in Bitcoin. We go into Bitcoin and this is how much, this is our address. We copy it and we send the money. We have an hour to send the Bitcoin, but we literally get, like I say, I do it right now, whatever. I scan the QR code, I send it, it literally lands in here in less than 30 seconds. Like the max it will ever take is an hour. And that's fucking impossible. But it literally gives you a window of an hour to send the money. And what happens if you don't send it in that window? What happens if all these questions? I don't know. You have to come here to this live chat and you have to ask them. But just to kind of, again, I'm getting ahead of myself and we're going to do this live together next week. It's very fast and it's very simple. So if you guys understand, just don't type anything. It actually makes it a lot easier to read the questions. I just realized if you have any questions, please ask them at this moment right now. Are you going to show us how to deposit? Dude, I just fucking said that. What about taxes? We're not there yet. What is crypto? Kevin, you're trolling right now. Will you show us the crypto account? Sure. What about taxes? Sure. Again, yeah, I that's literally what I didn't want to do. Now, what I know, like two of you guys just said, I'm confused. I'm confused because I'm getting advanced. I'm getting too ahead of myself. So I'm gonna have to ignore a lot of your guys' questions, and I'm just gonna have to continue the curriculum that I had on the way that I had it. So I'm sorry for those of you guys that are ahead and you guys are asking questions that you guys probably want to get the answer for now. But I have to sadly ignore you guys because I feel like I just went too deep on one thing when I just explained what the fuck the broker is and how it makes money. So again, please be patient, guys, and we'll get to every single one of your guys' questions throughout the bootcamp. So this is what a broker is. A broker, like LQH Markets, is basically the middleman in between you and the real markets. They charge a fee for putting you into the markets. The fees are inevitable and they range from $1 to $10 to hundreds to thousands of dollars. It directly correlates to what you have in your account at that very moment. If you have $100 in your account, the fees are going to be directly correlated to the $100. If you have $100,000 in your account, it's going to be directly correlated to the $100,000. It's a very small percentage that follows whatever account you have and whatever lot size you're using and all that. So what is a lot size and all this works? That's what we're going to get into. Right now, I just want to understand, I want you guys to understand what the broker is because it's one of the platforms that I explained to you yesterday because it is impossible for you to trade without a broker. You can have the best market analysis in the world and you can have a winning strategy. But if you don't have the platform that's going to execute this trade, you're pretty much kind of screwed. You would need the platform that's going to execute that trade for you into the market. And this is the platform that is going to do that. Now, if you don't want to use your own money, you want to use somebody else's money, this takes me to the next point, which is going to be prop firms. So prop firms, funding companies, all this different stuff. I'm sure many of you guys have heard it in the past that you can pass a challenge and they'll fund you. Now, there's a bunch of different prop firms out there. I would only ever recommend two. The first one would be FTMO, and the second one would be Rocket 21. So now there's differences in between both. I know people that have gone here and have gotten kicked out. I know people that have gone here and have gotten kicked out. I understand that this is been around for a longer time. And I understand this one has better challenges. To me, I don't use prop firms anymore. I haven't used for a very long time. I only use my personal account. And I personally have changed my approach to educating traders on how to become successful in terms of prop firms. I think prop firms are a great thing for about 6 months to a year of a trader's journey, and you should only be with a prop firm for that long and not depend on it to make it your whole entire source of income from trading. Because if you are really, really, really good, they're probably going to kick you out. Now, why are they going to kick you out? Don't these prop firms make money with you in the market? And the answer is yes and no. It depends how the prop firm works and how you trade. So if you have a very aggressive trading style where you're risking a lot, the prop firm and their risk team does not like that. They can't make money with you because they can't back all those trades. There's not liquidity on the other side of that market for the trades you're taking at that very moment. These are all more like in-depth topics, which again, I want to talk about that later into the bootcamp. Right now, I'm just kind of giving you guys the overall on how prop firms work. Prop firms are great, in my opinion, to understand how to learn how to risk money correctly. So, for example, let's use Rocket 21. You have to make 10% on your account. So let's do it on an account, right, for 100K. So on 100K, you have unlimited time to complete the challenge. And the challenge requires of you making an 8% without losing 10% overall and 5% daily. So you have unlimited time to reach this goal. Now, you can't hold trades on the weekend. You could trade on the news, and you don't have a first withdrawal because you're on the challenge phase, and there's no profits of it because you're on the challenge phase. It cost you $500 to get this challenge. Now, Once you take the challenge and you make your 8%, whenever you do make it without losing 10 and 5, you then go to the verification stage. So this is the start of the challenge. Then you have the verification, where you basically have to do the same thing, but instead of making 8%, you have to make 5. So it actually becomes easier on the next step. So you have to make 5% without losing 10% overall and without losing 5% within the day. So what this firm does, or many out there, they all force you to learn how to pass the evaluation. They force you how to learn how to use risk management. I became profitable because of prop firms. I was great at analyzing the markets. I understood exactly where the market was going to go. I had a very clear understanding of market structure, direction. Like, dude, I was a fucking sniper with the trades. I can go and literally show you guys. But I was terrible at managing the money. You can be literally the best. I'm talking about the best trader in the world. And if you don't have risk management, you are not going to succeed. Let me see what analogy I can think of right now. I mean, something very simple. You can be the best. I'm talking about the best body, or you could be the best person at the gym. Like if you fucking hit all the machines, you push the strongest, you do the max in the machines every single time, and you go every single day to the gym and you do whatever you got to do. But if when you leave the gym, you eat like shit, you're gonna have a terrible physique. You're like everything you're doing at the gym does not mean anything compared to your diet. Now, you can have a great fucking diet and not go to the gym as hard, and you can be in better shape than the person that does hit it hard but has a terrible diet. Why? Because it's what you intake to your body, not what you output. So it's kind of the same thing here in trading, but it's kind of like reversed. So it's not about how good you are of predicting the market. It's how good you are when you're defending yourself from the market. Because the opportunity in the market is there every single second of the day, every hour of the day, every fucking day. That is not good, because temptation is very prone to everybody to go and do something, because you can go and execute whenever you want. And that's the problem. You have to learn how to stand your ground and stay at defense. So you cannot be the best trader in the world, but if you know when to stand your ground and whenever you go execute, you only risk a certain percent and you stick to that percent every single time, you will be more successful than somebody that does not stand their ground and is constantly executing into the market with risk management rules and not following a trading plan, simply because it's how it works. The person that goes to the gym every single fucking day, hits all the weights, lifts all the machines, and they do not follow the diet, they're going to get tired of going to the gym because they're not seeing any results. Same thing with somebody that goes to trading. They can be the best person that predicts the market every single time. But if they're not making any money, they're going to get tired of showing up to the market. So what the prop firms force you to do is to follow those rules and stay within these parameters. And it's going to get to the point where you're going to be really, really good. You're going to make a shit ton of money, and then they're going to boot you. Is how it works. Happened to me, and it's happened to hundreds of my students. It's like I don't want to call prop firms like a casino, but it's like a casino, dude. When you go to a casino and you make too much money, they kick you out. When you go to a sports book and you make too much money, they kick you out. And then that's where you have to go to the other solution, which is then using your own money. And here, they're never going to kick you out simply because you're connected to the real market here. And same thing here, you're connected to the real market here. So prop firms are great for you to be able to learn how to manage your money, and you're going to be fine up to making, I don't know. I know a student that cleaned like 700,000 from one of these firms. I know Jane Juice alone has cleaned like 300,000 from Moroccan, and he's still there and they haven't kicked him out. I'm just saying that they could kick you out because it's like that one in a fucking chance, and the chance is there. I'm not going to say that it's not possible, but the odds of that happening are very low. Like, you have to clean more than $1 million, and 3 months. Be like, all right, dude, like you're good. You're too volatile of a trader. They don't want to have you because at the end of the day, the same way they see you swing up, they don't know who you are. Like they just see numbers on a screen and they don't want to take that risk on the other side with you. So if you are part of a prop firm and you make a shit ton of money and you get kicked out, it's okay. The odds of that happening again are very low, but the reason why they're going to do that is because you're just too much of a high risk trader. Even if you made a shit ton of money, they don't know how long you can keep that up because same way how you got the right button to the right side, they don't know if you're going to do that to the downside and then you overexpose the prop firm. That's the main reason why they do it. I personally, like 10 people out of the 10,000, 20,000 students that I have, like 10 people that have been kicked out. And like that means that you're good, dude. Now you just go to your own personal account and then you trade your own money. So if anybody has any questions with this, please ask. So before that, if this makes sense, type 1. If it doesn't, type 2. Sick. Perfect. Everybody understands. Love it. All right. Please ask your questions regarding this. Zach Gray. How do I feel about this prop firm? I don't give a shit. I don't know. I don't know. I don't know any other prop firm that's not this one or this one. Even though, yes, I do know them, but for the people that want to ask the extra questions, I don't know. But if you buy the challenge and you lose the money, you're good. Yeah, you're the only thing you ever have at risk when buying a prop from challenge is what you pay for the challenge. If you get kicked out, do you get your money? Yeah, they give you your money and then they just say thanks, bye. That's basically how it works. I know like 3 guys personally that have done it. Prop firms are very risky. I mean, this is really all you're putting at risk. You're putting $500 at risk in exchange for 100,000. Sounds like a good deal to me. It's not even one, like fucking, not even 1%, bro. It's like 0.5%. I feel like some of you guys are just saying questions like Masi. You don't have to. This guy literally said, "Buddy, what about slippage?" Dude, I said we're gonna talk about slippage later. I feel like you guys want me to say your name or something. It's kind of ditty, but it's kind of a little sus. Do you have to use a VPN for prop firms? I don't know, dude. I haven't used prop firms in a very long time, bro. If you lose your money, are they gonna pay you back? Yeah, it's not even real 100K that you're dealing with. No, it's their so that, like the whole. I mean, it literally says it right here. Monetize your demo trading. Like this is literally like I'm dude. I don't fucking own this thing. They've been here in 2015. You know what I was doing in 2015? I think I was looking for a job at Dunkin' Donuts. Like I was just smoking weed somewhere. I don't know, dude. Like look, they have a shit ton of reviews. They have a shit ton of people. They do this because of legality purposes, but I'm sure they back people. What happens if you blow their $100,000 account? So again, if you have any questions regarding this company and how it works, you can go here to the live chat and you can go ask their live chat. They all have grave live chats and you can go ahead and speak with them. 90% of your guys' questions are questions about the prop firm. You have to go talk to the prop firm. I'm basically just telling you what a prop firm is. That's basically it. I'm literally not explaining anything else. So if you guys understand what a prop firm is, type 1, if not type 2. Now, how a prop firm works next week. It's just what it is. We're still such at the beginner phase, guys. You guys got to be patient. All right, perfect. So now that we understand what a prop firm is, so we understand the 2 different sides of the business. So we have the trade your own money or trade somebody else's money, right? Somebody else's, which is a prop firm. So now you understand what is trading your own money, which is on a broker, and how the broker makes money. And then you have what is a prop firm and how it works. Well, not really how it works, but what it consists of and how they would make money is one from the challenge fee and two from the profit splits and the data feed that you give them when you trade. So I'm sure they make money. Well, I know they make money from the percentage of the challenge just to cover, I'm sure, basic employee fees. But where the real money comes from is the data. The amount of data that every single trader gives off is so valuable to the brokers that you guys have no idea. So what the prop firms do is they sell the data to then the brokers, to the markets, to the big banks, and the banks with that information, they could then build a strategy or have more of an idea when retail traders go to them what they can possibly be doing. Because I mean, yeah, so like I know this stuff because like I'm very deep into the niche and like I know a lot of people that are very high up in this spot. And like I'll tell you guys, I don't have an issue. So the way it works is the broker wants to know what the trade is going to do before they do it and at what cost. So let's say right now you're a client, right? Put yourself in the broker shoes. You go to the broker. I should save this for fucking the how. But what? Let me see how this makes sense. What the broker wants to know is how risky is this client? And if all they see is you go in, your name is Alex Gonzalez, they just see an ID and they see this guy deposited $100,000. They're like, well, what the fuck do I do with this guy? How much of this do I trade with him? How much of it do I trade against him? All brokers do this. Anybody that tells you out there that they don't is a fucking lie. All brokers trade with you and they trade against you. They're a bank. The bank gets your money, and in your bank account, it reflects as if it's your money, but they don't have that money. They get that money and then they loan it out to the guy that's right next to you or right behind you at the bank when they're going to go buy a car, when they're going to go buy a house. That's just how it works. That's banks. The broker is the same shit. They get your money, like, all right, cool, thanks. Now I'm going to wait for you to execute a trade. When you go execute it, I'm going to decide if I go with you or not. That's probably too risky. I stay with it. Or I go against them. Or we split it. That's just how it works. So when it comes to the brokers get the feed from the prop firm without having to put any of that at risk. Why? Because it's a demo account. Since it's a demo account that you're taking a challenge on, they get that data without it actually being executed into the market because it's a demo. It's not real. It's a demo challenge that you're being passed in the valuation. And when you're passing the valuation, that is data that is valuable that if you would have done these same trades on the live account, it would have been a risk or it would have cost them something for them to know the outcome of your trade. But since you're doing it on a challenge, there's no cost because it's on a demo account. They pay for that data cents on the dollar, and it makes sense for them because then when you go from here to here, before you doing something, they already know what you're gonna do because you already have data history. And I'm not speaking like on one person specific, it's an overall data thing. I don't know if that makes any fucking sense. It's very deep, it's very like high level. I don't even know if I should like explain it right now, but again, I get very passionate about this shit. If this makes sense, type one. If it doesn't, type two. Ah, damn, too many twos. Okay. That's insane. Holy shit, bro. I didn't think about it like that. I'll get deeper in it later. Yeah, I'll get deep into it later. Okay, I'm glad a lot of you guys understand. Some of you guys don't. This guy cracked the matrix. Bro, no, it's like, no, it's not. All right, whatever. It's mad. I didn't think about that. Yeah, bro. A lot of these people out there think they know shit. They go out there and they talk stuff, and I'm just looking at them like, dude, you're so fucking clueless. Like, oh, like some haters, right? I'm looking at them like, dude, you guys just literally don't know anything. Like, you really think you know something, and you just look so like the real people with the money. First of all, they don't even look at those videos or they pay attention. But when they, if they were to look at it, they'd be like, bro, this guy is so clueless. Like, dude, it's like pointing at an ocean and being like, that is not real. that water is a simulation. It's not real. And I'm on my yacht smoking a cigar in the ocean. It's like, dude, what do you mean it's not real? But whatever, dude. But yeah, I'll get and things like this. Again, guys, it's only day 2. Like we have so much more time. So things like this, I have so much more in here that I'm gonna transfer to you guys. Can't believe I'm not fucking talking about this shit on day 2. Like this is so off topic. Like I need to reel this back in so hard. I'm sorry. So I'm gonna stop with the fucking crazy talk. All right, cool. So we know what a broker is and what a funding company is. That's crazy. We've been an hour in and we only talked about 2 things. I'm so sorry, guys. I'll stay back on track. All right. So what is a lot size? What is slippage? And what is leverage? So we're going to wrap these 3 things together. So what is a lot size? What is slippage? What is leverage? Okay. Let's start off with what is a lot size? It makes the most sense. So, a lot size is basically your form of calculating the type of money that you want to risk. So, let's say right now you have $100 in your account. This $100 you want to risk $10 from this account. It's how much you want to risk in the market. Now, when you go place a trade, you have to put those $10 at risk. And the form of you putting those $10 at risk is by a lot size. That is how you calculate how much you want to risk. So these $10 are going to be calculated on a lot size. So same way how when you want to spend $100, and again, you guys should be writing down notes. So the way this works, I speak it, you hear it, and you write it down. I'm not going to write everything down. You guys have to literally listen to what I'm saying and you have to write it down. And so that way you remember, because you have to understand it. And when you're writing it down, you have to remember what I said and understand it. So I'm going to keep saying things and you guys just have to write it down or go back and watch the recording. I'm not going to literally type everything that I have here in the notes. So when you go spend $100, there's different lot sizes to you spending $100. You have $100 bill. This is one type of lot size. Or you have, it's kind of funny. I don't have smaller bills than 100, but if I were to have 5, actually, I think I do. Okay, perfect. So if I were to have, and I've had this forever. This is $100 in ones, right? This is from the restaurant around the corner. This is a different form of the lot size. So you have one type of lot size, which is 1 unit, but that unit times 100 equals the same as this unit because this unit is worth 100. So at the end of the day, if I were to go place a trade, whether I bet with this or I bet with this, I'm betting the same amount of money. Nothing changes. When I go bet on AUD USD to go up, I put this $100 for AUD to go up, but this $100, they're both the same shit. They're just different ways on how the $100 is measured. And it's measured in trading by a lot size. So a lot size is when you go to MetaTrader, and on MetaTrader, when you go execute a trade, you're going to have this right here. This is super ugly because we're never going to look at it here. We're going to look at it here. So if you look at it right here, if I could just take right here, perfect. So let me just get this one picture. Okay, so when we come here to MetaTrader, if this thing does not. When we come here to MetaTrader, before we click the buy or the sell button, we're going to get this little thing right here, which is the lot size. So now we can put 1 lot, 2 lot, 3 lot, 4 lot, 5 lot, 6 lot, 7 lot. And what the lot means is how much you're going to be risking. Now, how this app works and how we do all this again, that is later. We got time. We're going one step at a time, which is how you use one of the buttons on this platform, which is what is the lot size. And the best way to calculate the lot size is how? How do you calculate the lot size? With the platform that I showed you yesterday, the position size calculator or lot size calculator, because the lot is how you calculate your position. So this is the position that I want to enter in the market. I want to enter with this or with the ones or whatever. So when we go to my FX book, we have position / lot size calculator. You put the money and then it lets you know exactly how much lots you're going to be putting in order for it to equal how much money you want to risk from your account. So let's use the $100 account, for example. And let's say I want to risk $10 from this account. We click on whatever 20 pip stop loss, which again, we'll get into that later. You put calculate, you have to put a 0.08 lot for you to risk $10 on your $100 account. So here we would put 0.08 and we click buy or sell, and we can only lose a maximum amount of $10. We cannot lose more, we cannot lose less. We could lose more, we could lose less, and I'm going to explain how much of that in the next point, which is slippage. But we're getting to that right now, don't worry. Just want to make sure that the lot size is clear. I personally don't know anything else about lot size. Lot size is how you measure how much money you're going to risk in the market. And I only figure out how big my lot size is going to be here on my position size calculator. I don't ever do my own fucking math. I don't do any of that shit. I come here on my $1 million account. I want to risk $200,000 on my $1 million account, and I want to have a 40 pip stop loss. How much is my lot size? My lot size is 834 lots. I go to my phone. When I go to my phone, I put 834.74, 834.75. I come back here, I delete, I make sure it's 75, and I click the buy button. That's it. That's all the lot size is. Lot size has no other math, no other science to it, other than it is a way of you calculating how much money you're gonna risk in the market. If that makes sense, type a 1. If it doesn't, type 2. Okay. Some people have 2s. For those of you guys that have questions about the lot size, please ask it now. Only about a lot size. So your stop loss is too tight. That's not good risk management. Motherfuckers, that's not the question to ask. It's about, yes, this is just an example, dude. Like, come on. Does the lot size of a $100 account move the same for a 100K account? Yeah. Percentage-wise, it's the same. So let me actually just turn off the chat. I have to constantly turn off the chat. So when it comes to 100, so let's say we have a $100,000 account and you want to risk $100, or let's just do $10, right? On a $100,000 account, calculate it 0.04. If you want to risk that on $100, you want to calculate it 0.04. It's the same $100. Nothing changes. But now when you change dollar amount to percentage, this is where shit gets crazy. Because if you want to risk 10% of $100, that's 10 bucks, 0.04. But if you want to risk 10% of $100,000, that's then going to be $10,000. And then this is the lot size. So when it's based off of money, does not, again, write everything that I'm saying down. When it's based off of money, it does not matter how big the account is. The lot size always stays the same. When it's about percentage, it does change because the percentage per account changes. Again, that's kind of a question that I think it should be self-explanatory. And this is basically where I would come to that conclusion. And there's nowhere else I would come to my conclusion how much I'm going to risk. What about splitting up the lot size? That's more on the how it's going to be used. What's the minimum lot size? This is the minimum lot size, 0.01. What's the maximum? I think 1,000 is the maximum. Can you put a lot size for 100% of the account? Fuck yeah. I do that shit all the time, man. Trust me. You could do it. Should you do it? No. But you could. You know? I don't know why you guys like I feel like a lot of you guys before I open the chat, right? And this is I'm not speaking to everybody. I'm just like speaking to like that 5% that want to overcomplicate this. Like, what about splitting it? What if you don't want to put the whole lot? Like, why are you complicating this shit, man? Like, this shit's not that fucking hard. I'm just explaining to you what it is. Like, don't like beat yourself up trying to understand everything about a lot size. I guarantee you right now, you want to save those questions when it comes to analyzing the market. Everything that I'm explaining to you right now will not define if you're going to be profitable or not. This is just so you understand what trading is so that you can learn a successful and profitable strategy on this platform. But if you want to master how to perfectly do a lot, bro, I don't master that shit. I don't do it. I just come here. I told you I do this. I do this. I do this. Boom, bam, bam, diggy, diggy, copy, paste, done. This does not define if I'm going to learn what the market's going to do. It's what I do here. So again, just for those of you guys that want to be freaks about every single one of these topics and like master it, this is not what you want to master. What you want to master is what I'm going to talk about on week 4. So if you guys have any questions, please ask it right now. So lot size is pretty much how much you're going to risk from the capital. Yeah, that's what I said. Yep. What is a contract size? So what's this dude's name, bro? This guy's fucking spammed this shit 100 times. AJ Sheepy. Brother, can you give me a second to get through this, dude? Please. Can you please repeat again? No, you're going to have to watch the recording. Do you look at units? No. You have a big heart and a lot of patience. Oh, dude, brother, I have a lot of patience. If you guys read half of these questions, your brain would have a glitch. How much do you risk per trade? So again, you guys are asking questions that are completely irrelevant to what question I asked. I asked, did you guys understand what a lot size is so I can move on to the next topic? If you guys understand, type 1. If not, type 2. Okay, cool. Perfect. Lit. All right. Next, we have what is slippage. And again, I know like the beginning days, it's only day 2, and I know I've been repeating this constantly. It's because for those of you guys that are advanced, I just want you guys to again be patient. I asked for 3 things when we started this boot camp, and I'm going to give you guys 100%: patience, dedication, and time. So the first couple of days are slow because the beginners are very anxious and they want to just eat the world. But I'm slowing them down. You get me? I'm relaxing them. So please be patient. So second point is, what is slippage? Let me see the best type of analogy for what is slippage. What is slippage? Okay. Slippage is like when you're hiking, right? She's kicking. Hiking man, right? So this guy right here. Let me find it. Right? Well, not me. That guy looks way too white. I'm Spanish, right? All right. This is me right here, right? As a fucking kid hiking, right? Trading is just like hiking. I mean, no, not trading. Slippage is just like hiking. What do you mean? How? Because when you're hiking, you're prone to slipping. You know, you can step on this rock the wrong damn way and you'll twist your ankle and you fall. But what are you going to do? You're going to get right back up and you're going to keep going. You're not going to let a little fall determine if you're not going to continue hiking to the top of the mountain and you're getting the best view that you're going to have for the whole entire day. For you to get this view, sit on top of this rock with your chick and tell her you're the man of the hour, you might have to slip around 1 or 2 rocks. You're not going to look soft in front of your girl. You're not going to be able to not put your arm around her in front of the view. You're going to slip and you're going to get right back up. You're not going to get pissed off and tell the fucking mountain it's a scam and go back down it and never go up it again. No, it's part of hiking. When you hike, you're prone to slipping. What are you going to do? You're going to make sure you got your shoes on tight and you take the step at the right spot. And if you do slip and fall, you get up and you keep going so your chick loves you when you get to the top. Same thing in trading. But you're not slipping down the fucking mountain. What slippage is when you execute a trade and you want to get out an exact point, but you don't get out there. And you want to enter a trade at a certain point, you don't enter at that point. So when you ever want to go up this mountain and you wanted to put your foot on that rock right there, there's a rock you slip, you're gonna end up putting your foot there. You slip, you have to sit down, take a break like my boy Josh right here, and you have to keep going. You have to then re-put your foot somewhere else. It's the same thing here. When you go take a trade, so you want to take a trade at this point right here, you have some slippage, and instead of you entering here, market entered you here. It is what it is. It's part of the game. It's inevitable. You can't have it. It's gonna happen. It can't avoid it. It's part of trading. Let's say right now I want to enter a buy on this market right here. This is what the market is showing me. This is the price that the market is showing me, 0.66378. When you go click buy on your MetaTrader for 3.7668, right? When you go here and you go click buy, when you go click buy, the market is not going to enter you right at 0.66364. Why? 1, because the market moves every second on the clock. 2, the price feed that you see on this server is very different than the price feed that the broker gets from the market. So the broker gets from the real big banks a bulk of orders, and the broker has to work with that. So you like it or you don't. You hike to the top or you don't. You get your picture with your chick or you don't. There's nothing that you can do about it. It's part of the game. Slippage is inevitable. And I feel like the way I'm explaining this is as if it were to be something very exaggerated. It's not. It is for, I don't want to offend people, but for the pussies of the fucking game. Like if you're a fucking pussy and you're scared of fucking slipping when you hike and you want to fucking hike with sticks, you're a bitch. Dude, you hike with both your feet and that's it. You keep it going. You don't use no damn sticks. That means you're scared of falling. I'm not scared of falling, bro. I'm going to keep going, dude. If I fall, I get up. Now, I'm just speaking in the events of a hiker. I'm not a hiker. Maybe you actually need sticks to hike. I'm making fun of people that hike. It's just an example that I'm putting, right? I'm not being super hard on it. But the point is that it's not a big deal. Slippage is really not a big deal. I'm just explaining this because it's going to happen and some of you guys are probably going to be confused and be like, what the fuck? So perfect example is this trade right here. I entered this sell technically up here. I entered on the engulfing of this candlestick. So I entered at 2.164493, but the trade entered me down here. So I had a spread, a slippage or whatever of 10 pips, 11 pips. It is what it is. It cost me that. Why? Because there was a lot of volatility, or there wasn't volatility in the market at that time. And that's just the price point that I got in. Now, what is volatility? What is spread? What is all that stuff? We're going to talk about that literally later. So please be patient. So I just want to again emphasize that slippage is normal. It's inevitable. There's nothing that you can do about it. Same thing is going to happen when you go close a trade. When you go close a trade, you're going to want to enter this trade right here. And let's say that this is your take profit and you had your take profit for a 1 to 2, for example, you're going to risk $100 and then gain 200. But when you go close it, it closed you out here. Oh, well, it is what it is. It's part of the game. When you got off taking the picture with your girl, trying to find the same picture, when you finish taking the picture with your girl, when you hop off the mountain, you're gonna slip and bust your ass. Now, does that happen every time? No, because not every single time it's wet or there's a rock or whatever. But when it does, it is what it is. There's nothing that you can do. Now, there's certain times where there's less slippage, and that's very predictable. You can literally see it on the phone. You can literally see it on the ground. Is there a rock that looks like it's gonna fall? Is the floor wet? You can literally see it. Like, it's not like you're blind to the shit. So you can literally see on the MetaTrader what the spread is at that very moment. So if you notice right here, this broker, for example, spread 0. 0 chance of slipping. Dude, close that trade right there, brother. Jump off that rock, tell her to jump on you, and you go right on down. You're gonna be fine. But my friend, if you get one of these brokers like how I got in the other day, where the spread is like how it is right here, and this is a terrible picture, but for example, this spread is whatever, the spread is higher, you're in for a fucking ride. For example, this spread right here, like this spread is 26. Dude, you're busting your ass, my friend. I'm telling you right now. Just be okay with it. You know that when you jump off this rock, there's gonna be some water. You either hold on with your damn stick, or you just don't jump off at all. But if you want to jump off at this very moment, this is the price that it's going to be. Now, if you wait a little bit more, you let the sun dry up the rock, it can get drier, and the odds of you falling are not that high. But if you wait longer, it can probably start raining, and then the odds of falling are even higher. So the longer you wait, it could go in your favor or against your favor, depending on the session that you're trading. Now, I'm going to tell you how all that works, when to do it correctly later on into the 30-day bootcamp. Right now, I'm just explaining to you what it is. So slippage is when you don't get closed out at the very point that you want to get closed out. You want to close your trade right here, and it closed you out right here. You want to enter your trade right here, and it entered you right here. So that is what slippage is. Slippage is the fee of hiking. If this makes sense and the analogies make sense, type 1. If not, type 2. Sick. All right, perfect. I see no 2s. I see some people asking questions, and respectfully, I can't answer the questions because they just don't make any sense. So slippage is pretty much spread. Yes and no. I'll get into that later. Bro, this guy's fucking hilarious, dude. I'll pay this guy to be a comedian. Oh, dude, don't worry, man. I got a lot more coming. Don't worry about it. Bro, I'm actually a hiker and I use sticks. And just because you called me a pussy, I stopped using sticks. Bro, this guy. Oh, bro, it's just a joke, you know? Does lot size impact the amount of slippage? Yes. That's more later into the how. This is just the what. Why is slippage happening? Because it's part of the game. If you hike, you're prone to slip. It's just how it goes. Can slippage stop you out? Yes. Yep. Yes, yes, yes. Again, that's later more in like the how and stuff. So I feel stressed, but it's good. Dude, trust me. Dude, we're like not even at the strategy point. We're just like, what the fuck is like, I'm just preparing you for the shit you're about to get into. So you can avoid spread but not slippage. You can't avoid neither. Either or is going to happen. It's part of the game. What is good spread? That's later on, not right now. Does slippage happen all the time? Not really, dude. But it's part of the game. Does lot size impact on how much profit you can make as pips are worth more or less? Yes, Sarah, of course. If you have a bigger lot size, the more pips you get, the more money you get. The smaller the lot size, the same pips, the less money you get. It's fucking common sense and common math. Can slippage happen in your advantage as well? It's never happened to me, so I don't think so. Okay, cool. These are all other questions that have nothing to do with slippage. Everybody understands slippage perfectly. Cool. Now we understand that slippage is basically you not getting in or out. So if I were to write down just one simple note on what these are, the first one is going to be what a lot size is, the way of calculating how much you're going to risk. So write that down. What is a lot size is the way of you calculating how much you're going to risk. Now, what is slippage? Slippage is the reasoning on why you don't enter or exit the market at what you see on TradingView. So if you want to close right here and the market closes you here or here, whatever, the reasoning behind that is slippage. That is the why. Why did I see on my MetaTrader? Because this will happen. You're gonna see on your MetaTrader X amount of profits. Just come here and search up MetaTrader profits. So you're gonna see on your MetaTrader, you're gonna have whatever, $40 in profit or whatever. You're gonna have $1,600 in the red. And when you close the trade, you're gonna have 1,720. And be like, why is it $80 more? Why? If I closed at 1,650, why is it 1,720? Why is there $80? Well, you have spread, you have commission, and you have slippage. So I know commission and all that, we're going to get into it in just a second, but one of those factors is slippage. And if you notice what I just said, it's $80. $80 on a $2,000 trade on a $100,000 account is nothing. Shouldn't give a fuck about it. Cool. We understand it. So slippage is why your trade did not close out at that very point. Is it common? Yes. Will it happen all the time? No. Sick. Next, what is leverage? So let me see if I can get a textbook definition. What is leverage in trading Forex? I just want to get like the correct. In Forex trading, leverage is a technique that allows traders to use borrowed money to increase their trading positions beyond what their cash balance would allow. Leverage is also known as margin. Leverage works by allowing traders to open larger positions in a currency by borrowing money from a broker. The trader only needs to pay a percentage of the full value of position as a deposit known as margin. The remaining amount is effectively temporarily covered by the broker. Yeah, that's pretty much it. It's simpler than that, all right? Leverage just gives you buying power. That's basically it. Same way right now, how with, let's say you have, I don't know, what's a perfect example? I mean, I guess the credit card is kind of the perfect example. Like you can have $100 in your bank account, but you have a credit card with $1,000 spending limit. You're able to spend more than what you have in your bank account by using the credit card. And the credit card is directly connected to your net worth. So you can spend more money than you have in your bank account, even if you don't have it, because it's connected to your net worth. And when you spend the money, if you don't have it in your bank account, it gets taken away from your net worth. You're never going to get access to, on the credit card, more money than you can afford. So when you use leverage, you have borrowed money, which is not real. Like if you deposit $100, you only have $100 in your account. You could bet as if you were to have $1,000 in your account for sure, but you don't have those $1,000 in your account. You only have 100. So if you have $1,000 in your account with a 1 to 500 leverage, you can bet as if you were to have 5,000, 50,000 in your account, but you don't have it. Now, if you lose when you are betting, like if you had 5,000 or 50,000, you don't lose more than what you have in your account. Does that make sense? If it does, type 1. If it doesn't, type 2. Okay, cool. I see some 2s. Fine, perfect. That's all when I say type 1 or type 2, and if I see 1 1 2 2 2 2 1 1 2 2 2 2 1 1 2 1 2, all right, I get it. You guys don't understand. When I see 1 1 1 1 1 1 1 1 1 1 2, 1, 2. I understand that everybody understands. So when I see more 2s than 1s or a 50-50, I get it. I have to go more in deep. Perfect. So the way leverage works, right? So let's go back to LQH markets. Okay, you come here. 1 second, guys. I'm logging in. Okay, so right here, I have a 1 to 500 leverage on this account. So I have access to 5, so it's 1 to 100. So for every dollar that I have on the account, it gets multiplied by 500. So I have a $500 buying power with $1. So it's a 1 to 500 leverage. Same thing happens with a 1 to 100. For every $1, I get basically a $100 buying power. So I have a lot more buying power with these $300 than I would with I have a lot more buying power with this $39,000 with a 1 to 500 other than a 1 to 100. So the leverage is what the broker will give you access to see how degenerate you want to be. The more leverage you have, the more money you can risk of your own money. The less leverage you have, the less money you can risk on your own money. I don't ever recommend to go over a 1 to 100 simply because it is too much. You don't need it. 1 to 100 is more than enough for you to blow your account, but not in one shot. You got like 3 shots if you try and risk all your money. So with a 1 to 500, you can blow it all in one shot for real. So I do that because I know that won't happen because I have stop losses and shit like that. I just want to be able to risk more on one exact position rather than have to spread it out. Again, I'm going to explain more on that on the how. So leverage is what the broker gives you buying power access to with your money. So let's say right now you have a credit card with $1,000 limits, but the broker or the bank only lets you spend $100 of that credit limit, or 200 of that credit limit, or 500 of that credit limit. Even though you have access to that money, the bank only lets you spend that much. That's the leverage the bank gives you. This is the leverage the broker gives you on your money. And obviously your ability to be able to leverage that in higher purposes. Honestly, for me, I don't really go into too depth on leverage. I know there's like a whole mathematic quant fucking genius shit behind this and people know how to do something with it. For me, what I've realized is the lower the leverage, the less the lot size you can do, the less money you can risk. The higher the leverage, the higher the lot size you can do, the more money you can risk. That's simply how it should be looked at, because when you directly correlate lot size and leverage, they go hand in hand. The more you can't have more lot size without more leverage. The more leverage, the more lot size. The more lot size, the more leverage. The more leverage, the more money you can risk. The way you calculate that risk is by leverage. The more money that you risk, the more slippage you're prone to. The more money you're prone to, the more slippage you're going to get. There's more people out there closing $100 orders than $300,000 orders. So you won't get slipped out of $100 position because it's really nothing in the $6 trillion market. But a $300 position, a $300,000 position is something that there has to be somebody on the other side of it. Remember, I explained to you guys how Forex works. When you're closing a trade, somebody else is losing that money in their P&L. So for there to be some other person with the exact same order flow of you, or a bank or whatever, at $100, it's much easier and accessible than somebody with $300,000. So again, I just put 300,000 as a random fucking thing. Like I barely have any slippage at 300. I'm talking like this becomes an issue at tens of millions of dollars. At 300K is bullshit. It's really nothing. But leverage equals access to your money more. The more you want to risk is on the lot size, and it has to be directly correlated to leverage. I don't recommend more than a 1 to 100 leverage. It is literally the max you should use as a beginner. If that makes sense, type 1. If it doesn't, type 2. Okay, see? Now I just see straight ones in the chat. I have not seen one single 2. Tomik, I do want to explain like that, bro. T-Mac. T-Mac. I fucking hope I'm not saying that wrong. Or, yeah. Well, I see what you're saying. You can also explain for the people like this. I was, but that shit's just so complicated in my opinion. Like even for me. Like I get it, obviously, but so how do you have access to more money in your account? So you don't. You don't have more access to more money in your account. Like the broker doesn't give you money. Basically, like the money is in your account, whatever's in your account, the broker just lets you use more of it with higher leverage. That's literally it. The broker, like, that's why I hate using this shit right here because they don't really give you money. You're only using your own money. They're just letting you use your own money more freely. That's basically what the leverage does. Doesn't really do anything else. Can you show us a trade without leverage? Like you won't be able to trade. You need leverage to trade. You need a minimum of a 1-to-1, at least like dollar per dollar. But I'd say you're good up to 1 to 100. You're more than fine. Noah, definition of leverage again, bro. Stop fucking with me. So do you get paid out on the money you use on leverage? Yes, the broker never gives you money. Leverage again. So picture leverage. So just picture this as leverage. Let's just make this easier. The more the leverage, the more the broker gives you buying power. Okay, so let me not use buying power because I see people saying, "What's buying power?" Okay. The more the leverage the broker gives you, the more the leverage, the more the broker gives you access to your money. That's literally it. That's basically what the fuck leverage means, essentially. Simple terms. So when you make money on your money, you get all your money. When you lose money on your money, you lose all your money. Yeah, that's it. If this makes sense, type 1. If it doesn't, type 2. Sick. Shit. I lost like 2 questions. Can the leverage be increased on your account? Yes. Do you only use 1 to 500 leverage? Yes, I use a 1 to 500, 1 to 100. Jane Juice 2.0. I don't know if this is a fucking troll or something, or if this is actually Jane Juice in here. So how do you know if you're abusing of leverage? When you blow your account or make money on it. Margin and leverage go together, basically. Yes, literally. Margin is the margin you have in your account. That's why I don't even have it here because it's like, I mean, it's a bullshit topic. So basically, more leverage equals bigger lot size. Yes, I said that already. Yes. Fuck. I'm just reading through some of these questions. Can you explain slippage again? Yeah, sure. As soon as I finish this topic, when you go watch the recording, you're gonna be seeing me explain it again and again and again on the recording. Not gonna say it again. Oh, trust me, I'm gonna repeat it again on the recording. Bro, this fucking guy, AJSHP, bro, there isn't possible to make billions. What? Dude, you're spamming this thing and it doesn't make sense, dude. Fuck. And the thing is that it's getting in the way of everybody else's message. So I'm trying to like dodge his shit, but it's like it constantly, dude, fuck, please don't spam, bro. Fuck. Like literally, AJ's message is doing this. It's like keep coming down, coming down, coming down. And I'm like, fuck this guy. Jesus. Here we got another one. Oh my God. All right. They fucked it up for everybody. All right. So everybody understands what a lot size is, what slippage is, and what is leverage. You guys understand how to calculate, and you guys understand how it works. Okay, let me just see my notes here. All right, I'm just looking at my notes, guys. Give me a sec. All right, sick. I think okay. Okay, so like I have more things I want to talk about, but that I would go on. So we're basically almost 2 hours in already. I can obviously keep going. What is I'm looking. Okay, so I'm just gonna go through one more, right? Just to kind of get it out the way, which is what is um yeah, so and it's actually good that I talk about this now because of tomorrow. Okay, so the next topic that I want to talk about is what is news on the market. So what are fundamentals slash news? How are they traded? How does it work? How do I use it in my favor? How do I make money with it? How do this? That is all next week. Right now, it's just what? What the fuck is this? So, what fundamentals in trading are? It's basically news. It's the way the news affects trading. It can affect your trade positively or negatively, depending on what side of that news event you are. Now, how do you know to be on the right side or the wrong side? You never know. I personally don't trade them. And again, I'm going to get deeper into that when we get to the how. The simple way on what the fundamentals are is going to be on Forex Factory. So this is where I have already explained to you guys in the past, where we are going to be looking at the actual news of the market, and you're going to be able to understand what is it doing. So we're going to come here and we're going to go to calendar. And again, I'm going to explain this when I show the how this platform works and how to use it. But what the news does is it shows you what is going to happen tomorrow at 4:30 in the morning for the Great British Pound. Now, when you're in a trade, you can decide if you're going to continue to hold the trade, close the trade, or not let it affect your trade at all. You can kind of see what the previous movement this did on this market event, which was 57. And they, whatever this fucking is, I don't know what this is. And they forecast for this movement to be 55. So if you want to see how effective this news event was, you go to the last time, you go into here, you find the last time this happened. Maybe it happened a week ago, a month ago, a year ago. And then you go to the charts and you find that day, that hour, that time. And if you go to that day, that hour, that time, let's say it was right here, you look at it, you're like, well, that did nothing. Or you go, you see something like this, you're like, damn, that did something. So you make a decision off of that. I don't do that. I've never done that. And I've made a shit ton of money without having to do any of that. So that's basically what the news kind of does. It moves the market up or down. Only up or down. I've never seen it move it backwards. Obviously forward, because as it moves up or down, it goes forward. But I've never seen the news move it backwards. The day it does move it backwards, we got a problem, right? We're gonna have to find a different profession to do. But until then, we have to simply continue to use it how it does. And it's gonna make it at the very current price point where it is right now. And I go have it move up or down. It's basically what the news events is and how I use it and how it works. We're going to get into that next week. But the fundamentals are basically going to push the market in or against your favor, depending where you are in the trade. And the way you know when the market are going to happen are here. Now, which one should you pay attention to and which one shouldn't you? That is going to be a question for next week. If all this makes sense, type 1. If it doesn't, type 2. Sick. Perfect. Shit, give me 1 second, guys. Give me 3 minutes, guys. Give me 3 minutes. All right, all right, all right. That boy thick. Ah, dude, here we go. Here we go with the sus. If you guys can hear me, type one. If not, type two. Sick. All right, cool. So that is pretty much it for today. I wanted to come back and do a little Q&A. So today we went over, let me just do this. Hold on. All right, so today we went over news. What is a broker? What is a funding company? What is a lot size? What is spread? What is slippage? What is leverage? And a little bit more in-depth thing. So if you guys understood it and got it, everything for today, type one. If not, type two. Just want to make sure. Sick. All ones, literally all ones in the chat. One dude is putting a number 7. I don't know why. Maybe he broke his number 1 on the keyboard and 7 is the closest thing to 1 for him. So get it. AJ, dude, holy shit. What is this question you're asking, brother? Dude, you're writing a big paragraph. Holy Jesus. I can't answer your question, AJ. And the problem is that that's not his name. Things like AJ, whatever, like 5 random letters with like no, like I can't pronounce it. All right, cool. I mean, what questions do you guys have? Let's see. I have a question on leverage. Can I have a $50,000 position with $100? No. No. Thank you a lot, bro, for sure. Do you trade on news days? So that's on the how, and we'll get to that point. Don't worry about it. Did you fail any funding challenges? Many, 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 many. What leverage do you personally use? Hannah, I guess you made it late to this call, and I'm going to force you to watch this recording to where I answer that question. How do you calculate lot size? Joseph, you were late as well. Please watch the recording. Bro, put comments. Don't know what you're saying. Is there another time that we can ask questions? Alvaro, this is your time to ask a question. Do you determine stop loss on the position size calculator? No, I determine the stop loss on the charts, but we haven't talked about stop loss yet, have we? On the 100 to the mill, so this is a great question. Daniel French, on the 100 to the mill, why did you open multiple positions of 90 and not just one position of 180? Please answer, please. Sure, Daniel. And that's more on the how. It's how I did it. If you notice, today what we talked about is the what, and that is on the how. And on the how is where I would explain that. But sure, I could advance that answer right now. And I did it to avoid slippage. So when you have a big lot size like that in place, like let's say an 800 lot, it's not that probable that the broker on the other side could find somebody with a precise 800 lot. So what do? I break down that lot size into 8 different 90 lots. And in those different 90 lots, there is less slippage per trade because it's a lot easier for the broker to go find 90 lots to close rather than one big 800 lot. So I do it to avoid slippage. So instead of me taking one step on one big rock that I can potentially bust my fucking ass down the hiking, I'd rather step on a bunch of little rocks my way down. Hope that makes sense. Do you always use LQH and VPN just to log into the accounts? You don't need it on your phone, or maybe you do. I always have a VPN. Yeah, you know what? Yes, you do need to be. Yes, that's it. I can't. You know what I realized with you guys? I can't leave. I can't give you guys a real honest answer when it comes to an open-ended question. Like I have to just tell you yes or no. I can't give you the overall like complicated. No, yes or no. So do you need yeah, you need a VPN at all times. Why? Because you do. Done. When creating an account, Brandon, that's not a me question, that's an LQH Markets question. Sorry, you went very depth into that question. You have to go and talk to them. If you want to know how to bypass it, watch the recording. Are you still able to take trades with no? If you have money in your account, you have margin. You will always have margin if you have money in your account. Margin is buying power, it's leverage, it's account. Would you recommend to buying $100 instead of depositing? That's more of like later on. To this point right now, I don't recommend anybody, like literally nobody. Hold on, guys. I have to turn off the chat because there's just too many fucking crazy questions. Just literally, I can't keep up, honestly. So I don't recommend anybody up to this very point right now to buy a challenge or to deposit into an account. I haven't taught you guys how to trade. I haven't taught you guys anything yet. I've only taught you guys what everything is. Like I want you guys to realize that. Like we've only talked about what shit is, not even how it works or how do I use it. You're nowhere near close to depositing or buying a challenge. Save your time. Again, I asked for three things. I feel like I'm gonna have to repeat myself a lot during this boot camp. I need patience, I need dedication, and you need to give this shit time. Please, guys. Makes it easier on me. Like today, I would have loved to talk about these other things that I wanted to talk about, but it'd take another hour. I don't want to do 3 hours today because then tomorrow it's 7 in the morning. I know some of you guys are late at night where you are, might get late sleep. So I don't want to like whatever, like I'll add it to tomorrow. It's not a big deal. So I mean, basically we're done for today in terms of topics. Right now, I'm just answering questions. So if you this guy's got to go to the bathroom supposedly. Brother, you can take me with you to the bathroom. Like, I'm not gonna see you do your thing, bro. I don't trade indices. Does leverage matter if you're risking the same amount each trade? Leverage matters when you're going to execute whatever risk you want. Like that question doesn't even make sense, bro. Sonny, does leverage matter if you're risking the same amount each trade? What does that even mean? Like this is what I'm saying. Like you guys find a different way on how to ask such a complicated question. Like, what does it matter if it's the same fucking trade? It doesn't, bro. Whatever you risk is whatever you risk. The leverage doesn't matter. Like leverage is just the broker giving you access to your money. Now, how you get access to that money, whether it's a lot or a little, it's depending on your leverage. It's literally it. So is there a difference between slippage on one position? Does it make sense? What is the number on your car? Why I do sometimes. Is there a difference between fundamentals and news? Yes, there's a difference. And the difference is that it's the same thing. It's just the difference is the word used behind the concept. It's like saying taking a shit or taking a crap. At the end of the day, something's coming out of your ass. Does the lot change depending on your stop loss? Yes. Hey, we are every person on this call has gone to the bathroom more than once. All right. So we're human. Can you leverage on an account that's modified? Makes no sense. Why do I sometimes lose less than what I risk if I hit my stop loss? Because of spread and slippage. I don't plan to trade for the rest of the week simply because like I said, we're on a swan event in the markets that happens once every 4 years. I don't have to trade this week to make the money that I want to make. I'll wait till next week or the week after. Who am I voting for? I personally am a registered Republican and I align a lot more with Trump than with Kamala. So I voted for Trump. For some reason, that's a very important question for a lot of you guys for some reason, but yeah, I'm Trump off fucking day. Can you shout me out? No. What have you earned for me to shout you out? What have you done for me to shout you out? If more leverage gives you more access to my money, why do you recommend 100 to 1? Why do you recommend a 1 to 100 rather than 1 to 500? Because when you have access to your money fully or more than you should, you can blow it a lot faster. So I recommend to start off 1 to 100. You don't need 1 to 500. You really don't. Yeah, there's a lot of trolls and it's very hard because I get it. I'm funny and I the people that are advanced, they get like the perception that they could crack jokes and I get it, but I'm seriously trying to read every single question, but I'm like scrolling through 50% of them. They're just random questions. What leverage is needed? Oh, fuck, I lost it. Do you recommend to just stop loss? What is a stop loss? How we talked about stop loss? Nope. So I can't answer that question. I'm only looking for leverage, slippage, fundamentals, broker, or funding company questions related. What leverage needs to be used to blow your entire account? Look at this guy asking the fucking worst question ever. Why is the stop loss needed to calculate your lot size? Don't you know how much you're gonna possibly lose? Yeah, dude. But where are you gonna exit the market if it's wrong? That's the whole point of the stop loss. And again, I get why you're asking that question if you're potentially a beginner, Gabe, and I'm gonna get to that point tomorrow. I was supposed to talk about stop loss and take profit today, but I'd rather do it tomorrow. Can you upload the recording? I'm gonna upload the recording as soon as I possibly can. I like the way of teaching. It's very patient, very mindful. I try my best. So again, and I'm glad that I'm doing this and spending this time here because a lot of your guys' questions, for example, this special candidate here, Alberto Camos. What percentage do I have to risk in order to get a 1 to 2? Buddy, we haven't talked about risk management. We haven't talked about risk to reward. You don't have to spam your question. Your question is completely, and again, this is what I said what was going to happen. A lot of you guys were going to ask questions that weren't related to today's topic because today's topic made so much sense that you want to learn the next topic. So I get it, but I am ignoring 90% of these questions because they have nothing to do with today. So if you get your questions ignored, I apologize. It's simply because you're not listening to me and you want to get a question answered that is for tomorrow or for the day after or for next week. I want to answer questions that are about today. So if everybody understands today, I can then move on to tomorrow. I don't feel comfortable moving on to tomorrow until we don't understand about today. So those of you guys that are asking questions, it's not about today. So if you guys don't get your question answered, don't get booty hurt and punch a fucking pillow or, flick me off and through the screen. Cause like you could be flicking me off right now. I won't ever know. But it's because we're not there yet. You're not being patient, which is the first thing that I ask for you. Patience. Yes, Kaleon, I have multiple accounts on LQH and multiple accounts on Oanda. I don't know why you want to know how many accounts I have, but yeah, dude, because I opened it. Yeah, Kilian, you're clearly late. All right, cool. Yeah, this is just draining at this point because this has nothing to do with what we did today. So again, appreciate you guys with being here all the way to the end for once again, those of you guys that are asking questions that are completely irrelevant to today's topic. It makes it very frustrating and very difficult for me to get through it as effective and as fast as I'd want to. I want to go through these classes effectively. I don't want to have to constantly be stopping, reminding you guys of what to do. I need you guys to be aligned with me in order so I can teach you guys correctly. But if you guys want to be aligned with yourselves and not with me, it makes this even more difficult. We have to be, we're a team, we're here together. I'm educating you on something and you want to get ahead of the class. And that's cool because at least we understand that you understand where we are at this very moment. But that makes it more difficult for me because I'm trying to bring everybody with you. So please be patient. Don't ask questions that aren't related to today's topic simply because it makes it very frustrating to go through all the other questions. Again, I'm a very patient person. I will repeat this throughout the whole entire boot camp if I have to, but I think we're all mature and we're all adults, and it would be much better if that doesn't happen so it doesn't fuck up the pace that we're going for the boot camp. So again, if you have questions about support and resistance, how the fuck do I do this? Where do I enter the trade? Where do I this? We are not there yet. Please be patient. Trust me, we're gonna get there. And I would appreciate your guys' patience to get to that point. So for you guys that are being patient and are waiting, thank you very much for being here all the way to the end. Thank you very much for being part of day 2 of the 30-day bootcamp. And I hope to see you guys, every single one of you guys over here today, tomorrow, once again at 7 in the morning. So I'll see you guys tomorrow, 7 in the morning, EST. You're gonna get the email, you're gonna get the link in your email like always. And I'll see you guys then for tomorrow's topics. Make sure to set and forget, and I will see you guys then.